We believe that the results are pleasing. We saw our revenue increase by 14.5% and our headline earnings per share 19.8%. I think in current circumstances it's a job well done. We've had fantastic areas of growth and we've had some areas that were quite tough. If I can think quickly, our retail business found it a bit difficult. We found that retail over the Christmas period was not as good as we all expected, and a lot of stock remained in store. And on the other hand, we saw a lot of enterprise business, software renewals. We saw our finance business delivering good numbers, our services business. All in all, very pleasing. The three parameters I can think of quickly being gross profit, operating profit, and operating expenses all reaching either all-time highs or all-time lows. In the case of GP and operating profit, all-time high as a percentage of revenue, and operating expense all-time low, so we're as efficient as we've ever been. When I look at the group, I see three main operating units. It's our traditional ICT distribution, we see software and services, and we see finance business. So ICT distribution has got two main drivers, Pinnacle Africa and Access Work Group. In Pinnacle Africa, we focus more on providing ICT product to the SMB market space. We also provide infrastructure products. I mentioned fiber, optic cable, copper, connectivity, wireless. That's the business. That's our traditional business where the whole group developed from. Access Work Group is an acquisition we made a couple of years ago. There we focus mostly on the enterprise grade product, server, storage, and software solutions. That part of the business is still make up about 80% of our group. It's the main driver. We find it a robust part of the business in the sense that we sell product which ultimately in any enterprise become mostly mission critical. If you need to up your data center, be it storage or capacity, you've got budget, you're going to do that. In that business, we've got a part of it that supply the retail market, and we found that our retail market was not as buoyant as it could have been over the Christmas period, and that dragged a bit of the numbers down, although we found a company like DataNet that supply infrastructure solutions had a fantastic 6 months. In fact, it was a turnaround story from a loss-making business to now being profitable. So all in all, the one balances the other, and we did well there. If we look at our services business, InfoSol, again, the main focus there is to be able to sell more service contracts, build up that much sought after annuity income streams. We've been quite successful. We signed additional 2 fairly bulky service contracts, which is very pleasing. You will see that business on a year-on-year basis is growing quite nicely. Revenue up in the 20s and profitability up in the 17s. And then lastly, our financial services business, where we offer financing solutions to our partners. That business you will see on a year-on-year basis up approximately 28%, and with a book that's gone from roughly 51 million to way over 200 million. A very, very interesting part of the business.